Hi everybody, welcome to our channel by name Stock Market Way. In this video, we'll be discussing about the pre-closure or pre-open market analysis for the Tuesday, that is on 21st December 2021. First, we'll open up the Bank Nifty chart. Yeah, yesterday it has given a very good rally, that is 1237, more than that itself, that is nothing but 1500 points it went down rally, but for an intraday trader we will not get that much points to be captured, because these gap ups and gap downs cannot be captured in intraday. Even the first candle also it's very tough to capture, so almost 750 points you cannot capture. But from 750 to again it made 1 2 3, so 750 points down from the, there's no those much of down points, and but from 750 again it made down rally to again 500 points up. So you can see at the screen 34,123 is the price it made low, and from there 34,514 is the ask price which was closed yesterday, that is of the previous closure trading hours. So 400 points from the bottom it made high. So considering this, if you want to trade it in intraday, so always go for option chain data, study the option chain data, or else do paper trading. If you don't know how to study option chain data, what is strike price, what is call and put, there are so many videos we prepare to make it on our daily basis for pre-open as well as post closure. So rely always check our YouTube channel, so check for the previous videos. Even in our post, that is nothing but in our website we post on regular basis about the basics of stock market information about trading and option chain data. All those details we provide in our website called Stock Market Way. So first we'll start with the option chain data for the 23rd of December 2021, that is for the expiry. This is the NSE provided data. The data is previous before the market open timings. So this is the spot price, 34,439 is the spot price, and these are the CE contracts and these are the PE contracts. As you could see, there was a huge fall in the market, so all CE contracts are fallen like anything. If you club these two, you could see 1000 or even 1100 points. Premium has fallen by 800-700 points. So you should be aware of how much risk we should afford for a single trade, every trade, and then how much profit you can. Keeping that in mind, we need to be enter the live trade. If you are not, if you are unable to read any chart or anything, then always do paper trade, and then only enter the trade only when there is a clear cut indication in the market. Considering if the same thing continues for tomorrow also, that is for downtrend, you can go for 34,400p. This is the current strike price, which is near to the spot price. This has already made a big rally, that is from 100 it has reached almost 500, even 600 also yesterday afternoon, that is around 1 o'clock. But from there again it started falling from 600 to it fallen to 300. So even if you are an option buyer with a very less capital, if you are only you want to invest around 5,000 or 10,000 rupees per lot, then maximum you can capture only that means 5 to 6,000 rupees only, because you cannot capture the single candle, first candle, because when the market opens you will be in dilemma whether this gap up will be filled, or even it will be continued. By the time when you decide to enter this trade, the premium would have made higher, and then you will end up with entering it around 250 here, and 250 to 500, that is 250 points you get captured. So something like this 250 in Bank Nifty is nothing but 5,000 6,000 rupees per lot. So maximum as an option buyer you can expect that much only. Even there is a huge rally in the market, if you are affording this much. But if you are ready to carry the positions to the next day, but predictions we cannot make it, because always there can be a gap up or a gap down filling might happen on positional. That's very risky. Don't always do that in live trades. Same thing happened with Nifty also. If you could refer the Nifty option chain data here. Yeah, this is the Nifty option chain data for the 23rd expiry. There is 3 more days left. Friday is also closed, Monday is also closed. Completely big down rallies, 1000 and 2000 points rally happened, 1500 points rally happened. So totally clubbing together 2500 points rally happened in both the sides, Nifty as well as Nifty. So if you want to enter any trades, then always rely on the trend creation in the intraday, then only enter the trades. And if you are option seller, then always go for the premium, which is quite far from the spot price in the opposite side direction. Coming to the 3 stocks, that is cipla. See, every stock is a falling, but here pharma stock, this is going upside, so we cannot predict anything. So always wait for the trend creation, always rely on the charts, then only enter the trade. Else don't enter the trade if you are option buyer or option seller also, because option buyer or option seller for stocks, there will be expiry happening on every Thursday, last Thursday of every month. So you another 10 days are left, calendar days are left for the monthly expiry. So if you could see here, each and every premiums are decreasing in from P side, and then C side these are increasing as per the yesterday's movements. But market has fallen, but pharma stocks has been growing like anything. So always rely on intraday trend creation and indicators. Always follow the indicators. Instead of following the indicators, just follow the live chart. Whatever chart is suggesting, if you are able to read the chart, then it's well and good. If you are unable to read the chart, then just don't do any trade, because if you are unable to read any kind of data, then there is no meaning in entering the trade, or you are putting investment on which is the chart which is not in readable format for you. So always do paper trading, then only enter the trades. Coming to the third stock, that is SDFC. This is a stock in which easily you can capture 40, 50, 60, even 80 points also in intraday. Don't bother about the gap ups or gap down, just follow the, see, around 9:15 this made a big candle here. You can enter in the second candle itself, you can enter here approximately, see, around what is the price here, 2590. If you enter at 2590, this is the signal where it has given the reversal, because all 3 indicators are merged here. But even if you are not put at any target, 2590 to 2570, so that is approximately 70 points, 90 to 20, 70 points into 300 is the lot size. Let me show you the lot size here. Yeah, you see here on the screen, 300 is the quantity on this is the HDFC future chart. 300, so 21,000. Don't do anything, just follow the chart. Don't have a prediction like it will go down suddenly, it may come down, because when you enter here, you might feel like 3 green candles have been formed here. 3 green candles have been formed, I agree with you, but these 3 indicators, these are nothing but the moving average. Moving average 15, moving average 30, and moving average of 50. These 3 are not given any signals. There has to be a signals like this. These 3 should be merged, and then they should give what I can say, up rally. Then only that is the entry, that is a signal for the exit. Keeping that in mind, so there is no signal given here, so you should wait till this point, and then, or else you can rely on this green line alone, or these 2 you can consider. Whenever these 2 starts gets above, candles becomes above these 2 indicators, then there also it's a safe point to exist. But until then, there is no sign of existing. But if you have risk capital, then you can go for option buyer by selecting the premium, which is near to the spot price. Okay, this is what is the main overview given for the pre-open market analysis. Thank you so much for watching this video.